Hey guys, Carlos Cortez here with another episode of Scriptures in Wall Street. I hope you are doing well. Today I just wanted to have a chill podcast and just kind of talk about some trades I see, some opportunities I see in the future. There's a lot of distractions, as we know, going into 2024, going into this. Really, we're deep in the second quarter, going into the third quarter, and there are some opportunities I just want to bring out to the table. Of course, today we're just going to simply talking about opportunities out there, things to be looking out after. I want to say my disclosure here is that everything on this podcast is for education purposes only. I am a financial advisor, but this is not financial advice. This is everything on this podcast should be used for information and education purposes only. Some other trades and opportunities I'm going to be looking at today require a ton of risk. So this is not meant for retirement funds. This is meant for discretionary income. Never invest what you're willing to lose is what I would say. With that being said, I think it's really cool to look at some charts. We found out that just recently, China decided to dump some bonds, if you haven't seen that yet. So in this article, China ramps up de-dollarization efforts by dumping a record amount of U.S. bonds. Of course, woke Yahoo Finance reports China sold a record of $53 billion worth of treasuries and agency bonds in the first quarter. Bloomberg reported it previously unloaded U.S. debt to prop up its yuan, which again has grown weak against the rallying dollar. Let's fact check that. The country's pile into gold, which now makes up the highest share of its reserves since 2015. China unloaded a record volume U.S. bonds in the first quarter, escalating the country's pivot to dollar-dominated assets, away from dollar-dominated assets. According to the Treasury cited by Bloomberg, Beijing sold $53.3 billion worth of U.S. treasuries and bonds from its stockpile. Eye-catching volumes China was offloading last year, although one estimate has circulated that the country has sold over 300 billion of U.S. treasuries from 21 to mid-23. China's selling grew to the point that markets worried about higher yields. As you guys remembered, we have reports saying, even the BIS, the Bank of International Settlements, saying a warning to the United States, to foreign countries, that to give us a warning on our debt. So yes, our debt in the country's eyes is considered toxic. And hey, we're losing a lot of faith internationally. Of course, Biden has a lot to do with it, with the uncontrollable sending of money. And we want to be extremely careful with what is actually portraying and having our money simply just out there. A lot of clients, a lot of people listen to this podcast, have money just sitting out in the stock market. And it's wild because you're going to see more and more of this effort of a crashing market, of just liberal spending of money, literally liberal spending of money, and uncontrollable market indices that are really at the fruition of its forefront. Coming here. And so we're going to talk about some market updates. We're going to talk about some things to look at. What if I told you that you could position your assets to not just safeguard your money? We're going to talk about safeguarding, but what if I told you that there might be some opportunities in the future so that when the stock market does fall, you're not just making money on precious metals. Obviously, precious metals do very well when there's a market crash or unknown or a lot of fear, uncertainty, and doubt. We're going to take a look at the VIX and we're going to make our own opinion of what's going to happen. And I'm just here to explain the facts. I'm here to show you the charts. I'm here to show you what's actually going on in the midst of all the marketing, all of the hysteria, all of the things that are going on. Let's have a reasonable conversation on just what could possibly happen and what could possibly benefit you and your family as you make this investment in our future. So I want to just talk about, show you some charts here real quick. So speaking of charts, let's go ahead and actually look at something that is very relevant. I want to show you what the dollar is doing against China. Let's start there. So as you can imagine, with China dumping its bonds and China being a huge um, player in the BRICS situation, let's look at China, the US dollar versus the Chinese yuan. So when you dump bonds in your own in your own country, typically what happens, like what Russia just went through. Remember last podcast, I was telling you that Russia was lining up to buy the US dollar. So it backfired on them with Putin putting sanctions on the currency exchange. We saw the dollar rise. But here we are again. The US dollar versus the Chinese yuan is actually kicking its ass. And so back in January 23, we see this uptick. And of course, this is all time. I can zoom in. And this is back in actually last year of April 22. It just went up tremendously. And then it slammed back down. We had a lot of problems there with China. But look, it's on a tear right now, man. It's at 7.24. It was at a lower 6.68. But I got nothing but green lights here. You see these green lights down here? This is going to be our short term. The first block is short term momentum, and the last three blocks on the bottom are going to be our long term momentum. And so what we'll see here is just a massive upside in the dollar. This is the US dollar versus China. So our dollar is increasing. Meanwhile, China is unloading our debt. Think about that. Are the Chinese people wanting the US dollar? Are they investing in it? Well, it sounds a lot easier to do. And it sounds that the dollar is going to be continued to propped up. And so if we look at a lot of charts, and honestly, China's not doing well. If we look at in one of their ETFs that I follow, it's called Yen. And obviously this is 3 times leverage. But look at this downfall from back of February of last year. We know that China has some construction issues on with Evergrande going belly up and some other problems. But look at this just massive downfall in China, and it's continuing to go down. So yes, whenever you see a country go down, like their economy, we always see an uptick in our dollar. If we see our dollar crashing, there's always an uptick in the foreign markets. And so since the Chinese currency is going down, you're going to start to see our dollar prop up. So this is normal correlation, but it's just crazy to see that China for the past since 21, May of 21, I got a sell signal that their yuan was going to go down. And it's been going steadily down for the past 3 years. This is no joke, guys. This is no joke. And the other thing is your advisor should be telling you, hey, what's going on in the market? Your advisor should be giving you advice on what is going on. He should have these tools. But unfortunately, 90% of advisors are not even talking about this because their firms don't allow them to talk about international politics. They don't allow them talking politics. They don't even allow them to talk about their faith, let alone speak about the LGBT. There's Wells Fargo actually barred somebody for speaking against the LGBT agenda. It is wild, man. The behavioral jurisdiction these brokers have on their reps. So I really think it's important as we go into this election that you have these transparent conversations with your advisor and that they have your best interests at heart, because there's a lot of things that are going on, guys. Lots of things. This is just wild, man. To see this massive decline in the Chinese yuan. And I mean, what do you expect? We knew this was coming. No surprise here. So yeah, just continuing to the domestic markets. One thing I do want to add is let's look at Let's look at the NASDAQ. Let's just have a look at it. And then I'm going to show you something very interesting. So here's our NASDAQ. This is currently right now, June 17th is when I'm recording this. You'll probably see it Thursday. I am going to Dallas with a Rise Up Kings event to donate some time to help out with the Christian ministry. And hopefully men are impacted with their masculinity and their faith. But going back here, this blue cross means we have a golden cross. So we got this blue cross signal. We got it the 26th of June in 23, the golden cross signal, and it just blew up. So here we are a year later, June 24th, it's still popping up. I haven't gotten a sell alert yet on my system, but the whole thing is green, just as green as it was back 1 year ago. And honestly, a lot of this is NVIDIA, which we'll talk about NVIDIA here shortly. But the market just keeps on going up. I mean, going up. A lot of it's artificial intelligence. A lot of it's robots. A lot of it's just money, just people, greed and fear. But I wanted to show you something very, very interesting. That is NASDAQ. As you know, the NASDAQ is completely technology based. This is SSO. This is an index that actually makes money when the market goes down. And right now I got green lights everywhere. I mean, it looks like the NASDAQ, to be honest, but this is the complete opposite of the S&P 500. So if you're looking to make money off a crash, this might be something you will entertain. This is on the inverse side. So as the S&P 500 goes down, this will go up. And so I got green lights on a short term. I got green lights on the long term. I got huge momentum, even a cloud. So the momentum's here. That means the markets are either going sideways or down. Now, this is very interesting due to the fact that we're seeing all these news of manipulation. We see all these news of manipulation, but we don't get this in the media. We don't even see this on the media. And I think it's interesting that I'm getting alerts on the positive, on negative. So if you're looking to hedge your portfolio, you can look at SSO. It's good. If the market does correct itself, you'll have the ability to make a ton of money doing that. You can also look at the options if you're trying to throw some money at risk and leverage it. So let me know your thoughts on SSO. As you remember, SSO is short the S&P 500. Now, this one is not leveraged like 3 times like the other one. However, it is leveraged. So trade at your own risk. But if you're thinking that the market is going to crash, and you've been watching all the signs when it comes to the real estate, to the commercial banks, to unemployment, to the Fed messing around with the Fed funds rate, to pretty much the logistics, the consumer spending, the lack of consumer spending, then rising inflation and the unknown taxation. If you think this is the final straw, then obviously for education information purposes only, that's how you make money on the SSO. And if you want to get really, really creative, you can buy the option calls on it and really decide when you think the market is going to crash. Maybe in January, February, where you simply just look at the calls. I'm sorry, not the calls, the puts on the regular S&P 500, or you simply just buy SSO. SSO is the inverse of the S&P 500. Obviously, you got to trade at your own risk. But I wanted to talk about another ETF that is a huge marker for what is going on here. And that would be TMV. Now, you guessed it. When interest rates rise, the bond prices will go down when interest rates rise. And this is why we saw the bond market crash back in 22, 23. We had a huge crash in the bond market. However, interest rates are starting to come down, hopefully. Well, hopefully, I say that. So if we look at TMV, and I'll pull this up here right now. Thomas Motor Victor, TMV. We got to buy, sell. You guys heard me talk about this on a Trade of the Year podcast, but April 1st of this year, we got a buy signal on this. And what this basically is that if we believe the interest rates are going to come down, then the prices of those 20-year treasuries will go up. And so this is a prime example of 3 times the actual rate. So if I was to pull up analysis, like if 1 point could equal a 30% increase. So if we had a 30% increase, obviously TMV would shoot up literally 90%. So we could see upwards of 100 where it was back. TMV was back over 100. Oh man, call it back in 2009, 2010, somewhere around there. So here in 2010, we had 584. And right now it is trading around 3409. So if it goes up to 100 on TMV, which is very likely, and if we buy calls on this, so quite frankly, what we can do is we can go to the options montage. Now, I may be speaking Greek to some of you guys, which is fine. And if that's for you, look, don't invest what you don't understand. But once again, it's for education purposes only. What we're going to do is we're actually going to look at the option montage, because I got to show this. This is incredible. So I have a calculator on the options. Basically, we are going to look at TMV, which is currently trading at 3409. And we're going to select buy. And if we just look at, holy smokes, if we just look at the call options, let's just say the Fed decides to drop interest rates, which would rise the bond market. And we went all the way out to January 26, which is a very long time from now. For $80, for $1.85, let's select that one. And let's just say we bought, let's see here, 10 contracts. Now, an option basically is ability to control 100 shares for one strike price. So you would basically buy for $1.85 per share times 100, which would be $18.50. You would control over 100 shares per contract. But the thing is that it's got to reach $80. And once it hits $80, you are in the money and you have the option to sell it at that price point for $18.50. So let's just, assuming we went with the January 26, 185, and we bought these. All right. And we're going to calculate this by profit and loss. And wait for this calculator to kick in. So obviously right now it's 33 and it has to shoot up past 82.50, which is pretty easy to do as soon as they lower interest rates. This will skyrocket. So if our money gets called in at basic, let's see here, what was the strike price on this? At 82. So here we are at $81 on $1,800. We would make $18,800. Pretty amazing. So this is our option calculator, standard. But the risk is if it does not hit over $80, $82.50 to be exact, then we risk losing our initial investment of $18.50. So this is for someone that has an extra $1,800 to $2,000 to $2,500 laying around that they would like to risk. And we all know that eventually the interest rates are going to have to come down. Like the banks need the interest rates to go down. If the Fed says, hey, we're not confident because of consumer spending, Well, as soon as they get confident, they're going to have to lower the interest rates. We're going to have a hard landing. So to me, this is a very, very great trade, analytically and politically, fundamentally speaking. But seriously, that's 10 times your investment right there. 1850. Now you can get creative and say, what if I bought 30 contracts and I have more money and $5,500 is nothing to me? Well, now you're looking at, let me calculate that. I mean, now we're starting to talk bigger numbers. Now we're looking at close to $57,000 in profit if it goes over $81. Now, mind you, this thing could skyrocket to $300. And yeah, you're looking at $160,000, $150,000 to $160,000 on 30 contracts. Now, I say this as a disclosure: you got to trade with your own risk, and this is not for someone that's retired. This shouldn't be used for retirement planning purposes. This is investment planning purposes. The whole point of this podcast is that there's ways you can make money in a rigged market. And that's all I'm trying to say here is that using calculators like this, and having options. And that's just one deal. What if we scroll over to the volatility index? Now it gets really, really fun. So let's look at the volatility index. Guys, I love this stuff. I hope you're learning a thing or two, because I'm going to be talking about this. And as a matter of fact, I'm working on creating inner circle. I'm not fully ready for this yet because I got to get some attorneys involved, but I'm creating an inner circle, an investment club that is going to alert a group of people, whoever's in the inner circle. Obviously, I'll have to charge for it. I'm just going to send you the alerts, the trades, and you guys make the trades. I'm still working out the kinks, but comment below if you're interested in that. I don't control your money. Only you control your money. I'm just sending you alerts. And if you take the trades that I'm trading, there's a good chance you're going to make a killing. So this would be aside from our wealth management services. This would be aside from our safe money. This would be for a small bucket of your money that you're willing to risk, that you're willing to have fun with, and play the options game or the futures game, whatever is available. There's going to be different opportunities, not just in options, but also in crypto, and just crypto, ETFs, options, and futures. So we're going to release that as soon as I get all the ducks in order. But be on the lookout for that, because I am getting a lot of calls on people that want to make trades, and I want you to be profitable, especially with this rigged market coming on. So this is the volatility index. As you guys know, I love talking about the VIX. Now, the VIX is very important. The VIX is extremely important because what is happening here is anytime there's a market correction, you're going to see this bad boy just go ham. So back in 2020, this bad boy was up $85. Back in November 08, market crash. You guys remember that? This thing was up close to 100. And guys, right now we're at an all-time low, man. We are legit at 1274. Anytime it goes less than 13, typically it pops back up and shoots right up. So whenever there's some type of depression, recession signal, interest rate risk, or fear and greed in the market, which is all the time, you're going to see this thing just pop up. And it'll have these little bear market rallies. So recently it just went up to 19. So let's go to the option montage again. And we're going to look at the VIX. So you can see how cheap this is. The TMV is a great one, but the VIX is also just as good. We're going to get the price on this calculator. I'm just using a normal calculator, guys. Optionsprofitcalculator.com. And honestly, you should use options for insurance as well as protection and to leverage. So we're going to buy on the VIX. I mean, it gets really dirt cheap. So what if we went out all the way to January 2025 and we said, all right, we're going to go, you want to try to stick with $1 share at the 35s or even $36. So what I actually like about this next trade I'm going to show you, is the options on the VIX. As you saw that the VIX is really, really low, under 13. But what if we did the same thing and we looked at our option montage at 1275? We just bought 10 contracts. And obviously I'm going to get the price. It's 1275. We bought, all I did was buy the January 25 calls. Do you think the market will be volatile from now to 2025? And if so, how volatile? Well, I like to stick to a dollar a share. So 99 cents looks pretty affordable to me. That would be $36. So if the volatility index goes past 36, mind you, it was up over 70 just here not too long ago. All right. And what if we just simply bought 10 contracts? That is $999. $990, excuse me. And we're going to calculate that to see where we're at. And here we are. So this is just on a VIX. So if the market volatility goes crazy, just on $1,000, we just made $11,370 on a 36.75 VIX. If August happens and it goes to 36.75, we're looking at 94.90. I mean, it just gets really, really crazy. I mean, the numbers are just insane. But once again, you just want to make sure that you believe that this is going to go over 36.75. So I just wanted to show you some ways that you could actually profit from a market decline. Now, you don't have to buy silver and gold. What you can do is just simply buy the options on these inverse ETFs or even on a VIX or SSO. Guys, I can go on and on about all these crazy trades. But what you need to understand is that when it comes to trading and your investments, there's ways you can make money in the market, but your advisor needs to have these tools. Your advisor needs to tell you some ways that the hedge funds are making money. And even if you had a little bit of money to put away to make these type of trades, you should learn how to do them, because you could literally make six figures on these types of trades if you put the right amount of money, have the right amount of advisor, and continue just to not think with your emotions, but think what the high probability is. I mean, high chance the interest rates are going to fall. They have to, in order for our economy to stay at a growing pace. I mean, banks are filling up. People can't afford mortgages. They have to lower the interest rates. And I could show you the Fed funds, the historicals on it. And they probably will drop it down to 3 of the Fed funds rate, which is going to shoot the stock market up. But I honestly believe that it will be a knee-jerk reaction. The market will go down even when they lower interest rates, because that is when the dirty air laundry comes out. And it usually takes 18 to 24 months for us to really, really see the impact. So it's not going to be instant. And so there's going to be, what I do know is that if Trump gets in, whether he's installed, elected, whatever the situation, if he gets in, they're going to stop, in my opinion, they're going to stop printing money. They're going to stop sending money to Ukraine, and they're going to stop a lot of this stuff. Heck, they might even stop this BS automatic bill on the draft. I mean, you guys saw like the draft with 18 to 25, 26 years old automatically enlisted because the government's not doing a good job. Nobody wants to fight a war that's not ours. And it's sad that they have to force the younger generation into the markets. I'm sorry, the armies. It's just slavery all over again, in my opinion. You should want to join because you're proud of your country, not being forced. I mean, unless you're from Israel, right? Israel still does, I believe, where the draft is just automatic. But yeah, the TMV trade, man, I'm going to be watching that. I'm going to be talking about that. The volatility index, I'm personally taking those. I'll be more than happy to share my success with it, even my losses. Again, like I said, this is just for education purposes only. If you're trying to make this piece, please speak with your advisor. Or if you would like to speak to us about it, then give us a call, 813-448-3446. Or visit us online at cortezwm.com. These are some really, really good, sneaky, and slick ways to make money in a rigged market. But more importantly, I want to talk about the nest egg. The nest egg is what you really want to retire with. And because of having different buckets of money, like there's nothing wrong with having a pot of money that's safe, a pot of money that is secured. We have insurance on our home, our car, our health, our life, our dog, our pets, our cell phone, everything. But most people don't have insurance on their money. Just recently, I spoke with a prospective client that called in, and he lost money to One Republic out in New Jersey. Sorry, Republic Bank, not One Republic. One Republic is a band, but Republic Bank. And now he's looking to get insurance on his money, as that is a smart move. I want to tell you that if you like some of the option strategies I'm talking about and taking advantage of the market swings, insurance companies do the same thing, but they take all the risk. If those options don't get called, then you lose nothing. If they win, then you win big as well. And they take a percentage. There's no fee, but they take a percentage. So this option strategy is very popular within the index community, the index insurance community. And we want to be able to make sure that you have that to your availability. So it doesn't matter what state you're in. Obviously, Hawaii and New York, can't really do business there because the time difference, and New York is extremely not cooperative on having safe money. They want their citizens to just be in a stock market. And so when you have a safe money bucket, basically there's guarantees. There's guarantees that you never lose anything. So you want to have this pot of money that will grow continuously with compounding out of the reach of the government's hands in a safe private insured account that can guarantee your principal, and you make these returns. I mean, our growth oriented accounts are legit making. Last year we made 19% in this index. The year before that, we made 0. The year before that, we did 23%. The year before that, we did 21%. And back in 2017, we did 40% in this index. So these are the type of returns that you should be getting on your safe money, let alone the market money. So you have a bucket of money set aside for insurance that has reserves, by the way, dollar for dollar reserves. None of this, I think the FDIC is going to back my money up. Guys, it's too late for that, man. Like the banks are not doing good. The banks are not doing good. And, while we're at it, let's take a quick look. And I haven't even looked at it yet, but I want to just go ahead and share it real quick. Let's take a quick look at KRE. And as we're looking at KRE, I got another cross here, but no signal. So that means it's going to possibly go down. We got a bunch of red bars here. It's still turning green. So right now it's consolidating. We have it at 46.90. And if I zoom out, the last low was about 26.83. That was, of course, in March of 2020 during COVID. But it could reach this low. The banks are not doing well. I mean, we've had a massive trend line here. As we look at price, we had a massive trend line that is going down. The volumes, once it hits this top bar, typically it shoots back down. Like if you see back over here, it hits this blue bar, goes down. The blues are the bearish, the reds are bullish. So when it hits the bottom of this red bar, it typically goes back up. When it hits the top of this blue bar, it usually goes back down, mirrored with long-term and short-term momentum. So right now it's in the range, but it could go either way depending on how the Fed on the interest rates are. But we all know that the banks have a lot of commercial real estate exposure. And so there are things that we can even short KRE. That's something to look at, and I'll be on the lookout. But the fact of the matter is that you need to be creative, because they're being creative. They're being creative with the markets. They're being creative with everything. So it's time for you to get in on these type of trades. But even if you don't, I highly recommend that you put your money in a safe money bucket where it can grow like this. It can have some great returns. As long as you're okay having access to 10% a year, there are companies, particularly insurance companies, that will grow your money with most indices and with sophisticated indices that have these type of strategies already built into it so that you can take advantage of it. As long as you're okay with having access to 10% a year, and more importantly, you have money set aside that is IRA money or non-qualified retirement accounts that you just want it to compound and grow. We've done this with $55 million last year and another 40 something million the year before. We've been doing this for years, and we successfully moved over $250 million in the past 24 months. And we're proud of that. And we're securing a lot of Americans' retirement. So if that's you, if you would like to have a consultation on these strategies, give us a call, 813-448-3446, or visit us at cortezwm.com. You can also download our free guide at americafirstretirementplan.com. And I'm more than happy to have a discussion myself or my other advisor. Obviously, I'm only one person, so I need advisors to help take the load and answer calls for us. So give us a call. We're more than happy to help you. Also, if you do book an appointment with us and you actually run an appointment with us, I will also send you a free copy of my book, The America First Retirement Plan. And in that, we'll explain what is going on. There's obviously two types of economies. There's ways we don't have to fund this woke agenda. We don't have to fund Ukraine. You don't have to fund China. Speaking of China, you saw the Yuan versus the dollar. And I really think that is very important. Zechariah 4:10. Do not despise these small beginnings, for the Lord rejoices to see the work begin. And what I really like about this is that, God gives us, it's amazing how Jesus works. Jesus came in a manger with some stinky animals and one or two people, very, very humbled setting in a manger. And it wasn't a big deal. It was just a baby. But only to a few people it was a big deal. Obviously, Joseph and Mary and a few kings that followed a star to get to him. But it wasn't like this world was stopping and at the time. But I think that's just kind of like a paradigm shift, because I really believe that God will start something small for you. And even though we're in the midst of it and we're not knowing what we're doing, God continues to use us in the small ways that can lead to something big. How many stories do you have that, hey, I started this and I remember when it was this small. I started this and I remember this small. I gave this person a CD to listen to 20 years ago, and he came back and he always remembered it. And something that small rekindled our relationship. How many times can you think of something so small and minute that you were an impact to somebody? And I really believe that how Jesus's humbleness, the true humbleness of Jesus, literally came at the most humblest way to this earth. He could have came in as a god. He could have came in as straight up, a king on a white horse, slaying it, and with the crown of mass amount of angels just tearing up the whole world and say, bow down at me. But he didn't. He came humbly. As powerful he is, he's came as a human being. I mean, extremely powerful. And that's why when I read this verse, it just reminds me that do not despise the small beginnings, for the Lord rejoices to see the work begin. So he wants us to start small. He wants us to be humble. He wants us to see the value in the growth. And I don't know where you're at in life, but maybe it is with your money. Maybe it's with your business. Maybe it's with your wife. Maybe it's with your kids. But even the small things, there's something called micro dating. And I haven't been good. I've lost focus on, I need to get better. But just going out on a walk with your wife, 10 minutes here, 20 minutes there, lunch, taking your kids out during school for lunch, just being present And even if it's only 10, 20 minutes, what about reading your Bible every day, starting out small? Maybe it's a verse or two a day. Maybe it's just 1 minute with God. Maybe it's 5 minutes with God. Maybe it's an hour. I don't know. God doesn't care about the length of your prayers, the length of the time. He just wants to know that you care and that he communicates with you. But I guarantee you, if you read your Bible every day, you'll witness personal growth. Can't say the word guarantee a lot, but I will say that when it comes to reading your Bible, you will guaranteed become a better person and blessings will flow. And if you haven't had a communication with God, maybe you have a lot of sin in your heart, I just pray that you can pray this prayer. God, I'm a sinner. I know I acknowledge you as my Father, and I cannot live my life without you. Please come into my heart so I can forever be with you in eternity. In Christ's name, I pray. Amen. That's all you have to say. And he will listen. He will hear. And I promise you, your life will change if you really meant that prayer. But start out small. You never know where God leads us to. I mean, with this podcast, started out small. I started out doing ads with Stu, and now I got my own show. I started doing this, and now I don't even go and speak publicly. I just do podcasts, and people call. It's completely amazing. I've changed the whole industry in my industry. When I meet other advisors, they're like, "Oh yeah, we speak in libraries, we speak in restaurants, we go to town halls, we go to network events." I'm like, "Really? What do you do?" I was like, I just talk on a podcast." They're like, "Get out of here. That's a waste of time. I've tried that before." And it's just negative mindset. But God blesses the small beginnings. It is biblical in Zechariah 4:10. Well, guys, that's it for today. I'm actually going to be in Dallas donating my time with a Rise Up Kings event. We're going to be ministering to a bunch of CEOs, business CEOs, and we're going to be promoting masculinity and their relationship with God. And hopefully those men will have an encounter with the Lord so they can get their hearts right with God and embrace their masculinity. So when they go back home from this week camp, they will be restored, renewed, and released back into their homes, a renewed man, so that they can change their businesses, so they can be effective leaders in their families. Well, guys, I'm out of here. God bless, and we'll talk soon. Bye-bye.